Right, guys, just looking at the DAX again, fell 1% on Wednesday. We had some economic data come out, mainly PCE and the Fed's inflation gauge. Yeah, big fall there, rebounded at around 107. We are supported by slightly higher US yield, so obviously the 2 year, 10 year, anytime yields go up, the dollar follows there. So currently, markets are just trying to sort of gauge Trump's tariff threats. We're really reading between the lines there, because those are key partners. We're also looking for clues on from the Fed's November meetings. Um, but yeah, some key levels to take a look at: 108, oh 07, and it's just consolidating near 107. Other key levels there: 107.56, Tuesday high, and 108 on the dot. That's a psychological level there. So again, markets as a whole trying to gauge the seriousness of Trump's tariff threats. So we are aware that he may implement them. We just don't know to what extent regarding key partners who are also quite concerned about these tariffs. And again, another level, 105, if we do see a further fall on the DAX there. So markets, as we talked about the other day, regarding the DAX, currently consolidating. Everyone's sort of reading clues, trying to figure out, tariffs and different things like that. Also, just awaiting more economic data, and we'll see what the Fed does. But a lot of consolidation there, just a lot of indecision in the markets. From the charts, from a sentimental perspective there. So again, 105 big level, 107 and 108. That is something to keep in mind while trading anything with the dollar really. If you're going to be looking at the dollar index, quite an important thing to look at, and yields as well. Keep an eye on those. Okay, what do we look at next? Should we look at crude oil perhaps? I've actually been trading this one personally. So crude up 1% on Wednesday, trading near 68.70. Obviously, all the uncertainty in the Middle East, and an unexpected drop in US crude inventories, about 5.94 million barrels. Um, and look, we also do have the tariffs again. Trump is threatening with Mexico and Canada. So there's a lot of uncertainty in the US oil sector there, but it has been bullish. Well, it was bullish yesterday's trading sessions. And look, some key factors to look at again: 25% tariffs on Mexico and Canada. So keep an eye on that, especially when it comes to oil, and the geopolitical tensions easing in Lebanon. So that could reduce a couple of Middle East risk there. So currently, no real directions. Um, with oil, I can say, despite the 100-point increase yesterday. But we'll take a look at some key levels there, just in case you are trading it intraday or long term. So we've got 67.94, weekly low 66.57. That's the low from October 29th, $70. Obviously, big psychological level there. So a break of that level could indicate a lot more bearish momentum. And we've got 72.52, just a little bit higher there if prices do make it there. And some more support again, 68.45. Just a little more support there. But with crude, a lot of uncertainty, much like gold as well. With again, Middle East tensions easing up, and the tariff talks, 25% is a lot, especially for Mexico and Canada when it comes to oil. So just be careful with those. And also a delay in the OPEC discussions to delay production until possibly the second quarter of 2025 is also something to watch out for there. But no real direction from oil at the moment. It's just something I'm monitoring, trading very, very lightly and with a lot of caution. All right, let's take a look at gold since we're on the subject of comms anyway. This one, there was a strong rebound at 26.05. So again, still Trump tariffs, some geopolitical tensions with Russia and Ukraine. Obviously, there's still a demand for some safe havens there. So 26.05 was a huge rebound, huge rebound. Some other levels to look at again: 2700. We didn't quite get there, and 2678. We've also got 2663.40, which is a 50% Fibonacci level. So that's something to keep in mind of there. Again, 2700, 2600, 2605, which is where we rebounded previously after that massive sell-off. But currently, the market is still just awaiting some US economic data, just so we see what the Fed's actually going to do with rates. That's really the only thing that can move this, along with obviously bond yields as well. So higher bond yield, higher dollar, lower gold price. But yeah, lots of consolidation and still an apparent demand for the kind of classic gold safe haven. But yeah, no, look, that's it for today. That's what's on the market. And that's some of what I'm looking at personally, anyway. But if you guys do want any analysis on any other things, any other instruments, please let us know, and we'll be able to look into that.